Good afternoon, everybody. So I'm joined on the call by Rajan Arunachalam, our CFO. In fact, today we are, as you know, we are not in the office today. We're taking this call from outside because of the Maharashtra Bandh that has been called. So if there's any little bit disturbance in the call, I would like to apologize up front. However, we'll go ahead with the call. So once again, a very warm welcome to all those present on the call. And I'll go through, the results that we declared yesterday after our board meeting. So I hope you have had a chance to go through our results and the presentation that has been uploaded on the stock exchange as well as the website. I'll take you through the presentation in detail, like we always do, and of course look forward to your queries post, my presentation. So we started this year, which is 18-19, I think, with a very positive note. I think we have had an excellent year. In fact, it's been another quarter where all the segments did well. I mean, right from two-wheelers, three-wheelers, passenger car, which includes the UV segment, of course, which is growing stronger and stronger, and the commercial vehicle and railways as well. In fact, even the aftermarket, while it is not done it's done quite well, but it's not as per what we expected, but I'm sure it will take off in the quarters that are remaining. So we have reported the record performance in terms of revenue, EBITDA and PAT. The sales was recorded at 514 crores, which is the highest ever quarter sales that we have had. And this was a growth of 23% with an EBITDA of 49 crores, which is a growth of 26% compared to the same quarter last year. Profit before tax and after tax stood at 40 crores, 39.6 crores PBT and 26.7 crores, which are both about 31% higher compared to the same quarter last year. The growth has been a result of better performance in all business segments, like I just told you, and we also did definitely exercise some control, which we have started, actually a couple of quarters back, but we are seeing the results now, and we have been able to, control the expenses to some extent. So if now I'll jump into the slide, the presentation. So if you refer to the presentation, and I'm going to slide number 3, which again basically shows in pictorial form what I just shared with all of you. Revenue growth of 23%, EBITDA growth of 26%, and PAT and PBT growth of 31%. Slide number 4 clearly indicates that our EBITDA is 9.5%, which is, even if you see compared to the last quarter, the trailing quarter as we call, the Q4 of of 17-18, we have had a 3.6% growth in revenue, but a 5.4% and a 5.7% growth in EBITDA and PBT. If you move to slide 5, which shows the segment mix and the channel mix, while I did mention that all segments did extremely well, but there has been, of course, a particularly robust performance in the industry by the commercial vehicle segment, as you all would know. So you had an excellent growth in the commercial vehicle, and we being almost 85% of the market, naturally we tend to reap rewards on this front. So our commercial vehicle percentage in our mix has gone up to 15%. Our passenger car and UV has gone down slightly to 27%, and 2-3-wheeler again very robust growth in motorcycles. Plus we also gained some market share in some models, and also the new models that we launched have done well. So all this put together, we have had 58% mix of the revenue being contributed by the two-wheeler. If you come to the channel mix, which is on the same slide, again there has been a little bit of reshuffling here, but exports is down to 3%. It's actually dropped a little, and aftermarket remains at 11%. And the OE, as you know, the OE has been extremely strong in the last, in fact, the entire last year for that matter. And this quarter continues the story. So the OE is 86%. If Now, if you move to slide 6, which basically shows the details of the P&L statement, you can again see from here and all the numbers and details where we already shared the highlights with you in the earlier conversation. And if you move to slide 7, which shows a quarterly performance trend, the revenue, the EBITDA, as you can see, we've had a dip in the last year, but from the last 3 quarters, you can see it's been continuously on an upswing. So we moved from 9% to 9.4 to 9.5%. Similar, the PBT of PAT mirrors the same trend. That has also moved from 4.8 to 5.2 over the last 3 quarters. The slide 8 shows the key business updates, which I would just want to share with all of you. Gabriel continues, its proud place in the top 100 companies to work for. So we got this award in the month of July again. For the 4th time in a row, we are figured in this elite list. As we always mention, it is the people who make all the difference. Business is all about people. And this is where we have been focusing. I'm sure some of you must have had a chance to go through our annual reports. In fact, the annual report is titled A Culture Called People, because that's something that we firmly believe in. And it's definitely helped us in Gabriel as well as Anand Group. Of course, we draw a lot of advantages from being part of the Anand Group in this particular aspect. One more good thing that I would want to share is CRISIL has revised and upgraded the long-term ratings. The long-term ratings have improved from AA minus to AA with stable outlook, and the FD rating has improved from FAA to FAA plus with stable outlook. The other thing that I would want to highlight is, of course, we have increased the Anand management fees from 1.5% to 2%, which also have been incorporated from this fiscal onwards, from April 2018. So that you can see reflect in the P&L as well. We won a very key business of 5-1K, which is actually the replacement of Alto. This is, of course, going to be lodged in the next fiscal, not in this fiscal, but we have won the business order from Maruti Suzuki. So that's very important for us as regards volumes are concerned, because, of course, this continues to be among the highest sellers in the passenger car segment. Lastly, we inaugurated a small last-mile assembly facility dedicated to mainly TVS Motors. This is in Hosur, which will help us streamline supplies. It has already started yielding results, because, part of the reason why we were able to cater to such good sales and also could get a higher share of business was due to this particular move that we did. So this is completely dedicated. In fact, our quality ratings also have improved in TVS. So this clearly has helped us. Coming to some more, in the auto industry, we typically have the vendor meets, the annual vendor meets in the months of April to June, which is exactly in this quarter, where all the OEs do invite us for a 1-day or 2-day or a 3-day conference, where all the vendors are invited by the OEs, where they share their plans, and of course they also confer awards on, for the past year to the vendors. So I'm proud to state that Gabriel India won an award in the sustainability area from Mahindra. This was in the annual conference in Dubrovnik. This is a very special award because Mahindra does lay a lot of importance on this particular aspect, and as you know, Gabriel also lays a lot of importance on this particular aspect, and I think going forward this is going to become more and more important for any business. We also won the Gold Quality Award. This was 3rd time in a row from Bajaj. So we have delivered top quality to Bajaj year on year. So this is on the slide number 10. And of course I did mention the Great Place to Work already. So we 4th year in a row, but of course we also had won the award in 2012, so actually that makes it five times that we have figured in this list. Like I mentioned about the vendor mix of OEMs, we also have our vendor mix, because vendors, our vendors form a very important part of our success and our business overall. So we do this. We have been doing this for the last 5 years. We had the vendor meet this year as well in the month of July. We had some important visits. Yamaha, who is our very key customer, one of the top customers that Gabriel has. Also, we have a very good relation with this particular customer. So the chairman and MD of Yamaha had visited us to have a look at our manufacturing facility as well as the R&D facility in Hosur, which went off quite well. We also won the certificate of appreciation from Bridgemoor Lal Munjal Awards, which is actually Hero Enterprise. So this is again a very, very stringently evaluated award. So and we are again figuring among the industry's best here. If you move to slide 13, which shows the branding initiatives, Gabriel being the brand that is the strongest brand synonymous with shock absorbers, we continue doing a lot of branding. We associate ourselves with mainly rallies and motorsports. So we continue to be associated with Volkswagen for the Amio Cup and for the Gixxer, Suzuki Gixxer, which is among the best-selling motorcycles in its segment. And of course, you will see a whole lot of branding further over the year. But these are some things that I thought I'll share in the current quarter. And so that's about all on the presentation. Coming to in terms of the auto industry, I did not mention at the start, but briefly that it has done extremely well in this quarter, and I don't see any reason why it should do anything any differently in the balance year. So the outlook remains positive. We remain bullish. We did 500 plus crores in this quarter, so we seem to be well on track to achieve our plans this year as well. So with this, I would now open the call for questions and look forward to answering the queries. Thank you. Thank you very much.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jai Shri Ram from Karvi Stock Broking. Please go ahead.
Good afternoon to you, sir. Thank you very much for your insights and congratulations on a good set of numbers. I have a few questions. Firstly, you said 85%. When you said 85% market share, was it only for the commercial vehicle segment or the overall automotive segment?
Oh, that's the commercial vehicle segment I mentioned.
Okay, so overall, what would be your market share?
Well, we don't actually measure the overall market share because it's quite difficult and complex. So, and also we need to work on, we operate on individual business segments because that's how we can actually, build our growth story and strategies. So, just to share with you, we have 85% in commercial vehicle. In passenger car and two-wheeler, we are at about 25%.
Okay.
In three-wheeler, we'll be, almost 65%. And in railways, of course, it's tender-based business, so it's shared. So again, that would be about 25%.
Okay.
And of course, in the aftermarket, we are about 43%. 43%.
Okay. So, what would be your order book value at this point? I mean, can you give us some guidance about what numbers you see for FY19 and 20?
Jayashree, firstly, thank you for your congratulations. And we actually do not, give any guidance on the growth. But like I mentioned, we did 514 crores in the first quarter. You can even see the last quarter of last year. So and I don't see any reason why we should be doing anything differently. So I mean the growth can be estimated from the first quarter. So
I'm sure, but can you give us any order book value? I mean, just to kind of understand your revenue visibility, anything of that sort.
See, the way we do is we have what we do a business pipeline monitoring, which we do every month on month for each segment. And we ensure that we have a healthy business pipeline, not for, of course, because the current year is already done and over as far as orders are concerned. Because we work for orders which are in year 2 and year 3. All I can say is the pipeline is quite healthy in all segments.
Okay. And in the previous slide, you mentioned about some basic duty increases because of which that could affect your EBITDA margins. Can you give me some color on that?
Yeah. So in fact, that is one reason why we also had, we had to take that impact. This was a custom duty increase that happened in February actually, which went up by 5% in some commodities that we import. As you know, we import a lot from China. So that has put an additional impact this entire year for us. So these results are after absorbing that impact.
Okay. So that is already factored in.
Yes, it's already factored in. Pretty
and
much.
If your EBITDA margins are, if they're still maintained, have you taken any price increase for this quarter?
In terms of customer price increase?
Yes. What translates to revenue?
So we do. We have a back-to-back arrangement with customers on commodity increases. So right now, as you know, for last several quarters, the commodity prices have been going up. So of course there's a bit of a lag because the settlements happen every quarter. So yes, we have factored in whatever we have actually got. We don't factor in what we don't.
Okay, so whatever it is easily being passed on to your customers.
Well, I wouldn't say easily, but yes, we have that understanding with the customers. Yes.
And regarding this BS6 implementation for FY20, can you tell me how your product is going to change, or is there going to be any price increase, or do you need any special technological capabilities? Is there any drastic change you see in your product, or is it going to be just the same?
Thankfully our product is going to be absolutely just the same, no difference at all. The only thing is what we are trying to help are the OEs is because obviously we should try and reduce the weight, do some lightweighting because it helps them in their emission, which we have been doing particularly in the passenger car UV segment that we keep doing. But otherwise, as far as mandate is concerned, this does not affect shock absorbers at all.
Okay. And you had planned for, roughly about 156 crore capex, right?
Yes, that's right.
Yeah. So how do you plan on deploying? I see that your debt position is actually going down. So are you utilizing it from your internal accrual, or how are you going to do that?
Yes, that's how we have planned it. In fact, we had planned for an expansion, which has already been kicked off in both the Sanand plant as well as the Devas plant. So maybe Raj, you can also.
So on product expansion, is it this whatever capacity expansion?
Yeah, one is for a new product new LOI that we have got from Honda Motorcycles.
Okay.
In Gujarat, and the other is for our internal captive consumption.
Okay.
Yeah, Raj.
Yeah. So on the.
Sorry, I'm interrupting. But any breakup? How much is for Honda motorcycle, and how much would be for internally?
Yeah. So Jesse, just to answer your first question on the capex funding, this thing I think was clarified a bit. We're going to fund it through our internal accruals. We have 100 crore cash surplus as on March end, plus the additional accrual we'll have during the year. So we anticipate to finance it from our internal accruals. On the breakup of these facility costs, I think roughly in the region of 40 crore plus would be the capacity expansion costs at Sanand and the Devas facility.
Thank you. Mr. Sriram, I request you to join the question queue for any follow-up, as we have several participants waiting for their turn. Thank you. We have the next question from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Good afternoon, sir. So my question is on your first quarter numbers on the revenue side. Could you just help us out with the year-on-year growth that we would have registered in your two-wheeler passenger vehicle and the commercial vehicle segment for this quarter?
Okay, we do. We have not broken it up, but if you look at, we have also given it in our segment mix.
Right.
So possibly it can be derived from that. I don't have the figures offhand.
Okay, so
Raj, do you have the figures offhand?
Yeah. So roughly, I think 25% growth in two-wheelers, passenger car would be, a marginal growth, and commercial vehicle segment is where we have had the best of the growth in excess of about 50%.
Okay, so my next question would be on your passenger vehicle growth. It seems that we would have grown maybe in low single digit for this quarter. So any specific reasons for that? Have we lost any market share in the passenger vehicle business this quarter?
No, not really. So actually, we have grown in the passenger car as well. In fact, I would still say that we have grown ahead of the market. See, there's a different play happening in the passenger car. There's been a shift to the UVs. So, typically your best sellers are now, the UV segment vehicles. So if you see even in the industry, for the first quarter, the growth in passenger car was 8%, but the UV and vans, the UV growth was 16%. So weighted average growth of PC plus UV, if I combine the both, which actually that's how you have to do it ideally. So that would be about, in the range of 11%.
Right, that's the production growth, right? So.
Yeah, right. So, in fact, compared to that, we have had an excellent growth in the UV segment, but not a good growth in the passenger car segment. Yes, in passenger car, because we are not there on the Baleno platform, the Swift platform, and we are not there on the Hyundai platform, which are the top performers. So obviously, passenger car growth is not good, but we are on the Brezza, S-Cross, the XUV, the KUV, etc. So our growth there has been much better. So on a weighted average, we are actually better than 11% in passenger car.
Okay. So are we there on this Mahindra's upcoming new product, which is Marazzo?
No, we are not on the UT one, because that's the earlier Xylo platform. So Xylo is not this.
Okay. So this new project that we won on with Maruti, so are we the sole supplier for that project, or we'll have what share of business are we anticipating from that?
Yes, we are the sole supplier. At least as of now, we are the sole supplier, yes.
Okay. And so another thing of this management fee hike that we talked about, from increasing it from 1.5% to 2%. So what would have been the possible thought process on this, increasing this management fee?
No, it's like that we have been actually growing. The company has been growing, so definitely we also need some bandwidth to be shared. Where we have to fall back to. So you either fall back to, let's say, outside consultants, but we have a very strong group. So we have some resources and the central pool. So we have been making more and more use, because in terms of strategy, in terms of growth initiatives, in terms of even quality initiatives. Because this is something that we need to really focus upon and increase, so that as well, let's say, even in terms of the manufacturing practices, we have a group-wide excellence in manufacturing, which we have rolled out over the last 3 years. So all these efforts do definitely help us in continuously improving and making our position stronger in the market. So due to all this interventions, of course, we did consider the revision in this management fees.
Okay. So on this raw material front, because we are in the rising input cost scenario for the past few quarters now.
Yes.
So we generally, as you talked about earlier as well, that we pass on this with a lag. So we believe that in the coming quarters, assuming if the raw material prices stabilize at these levels, then we could see some benefit coming on your gross margins, because we'll get some higher prices from the OEMs then.
Yes, logically, I would say so. because when it's on the uptrend and you have a lag, obviously you're on the losing side. When prices stabilize or go down, in fact, when they go down, you definitely gain. So yes, that would be a fair assumption.
Okay. So my last question is on the capex thing again. Can you highlight what would be the total capex this year that we are looking at?
So if you heard the previous speaker also, Jayashree, it's about 150 plus crores, which is what we're planning this year. Yeah.
Okay. So out of that includes the 40 crore capex of this expansion at Sanand and
Devas
plant, right?
Yes. And Devas plant, yes. And in addition, a tech center also.
Okay. And then I think the balance would be the new piston rod kind of capex we talked about in last quarter, right?
So it's like this, that we are expanding in the plant to accommodate a completely new building and the facilities right from machining to powder coating and assembly for the front fork of Honda motorcycles. Mm-hmm. And at the back end, we also increasing the casting capacity in our casting plant. We are adding a furnace and a couple of gravity die casting machines. Mm-hmm. So that will happen in Pune because the casting plant is in Pune. So that includes part of that. And we have the Devas, the piston rod facility augmentation as well.
Yeah, but majority of the capex will get over this year. So from next year onwards, we'll be returning to a normal capex of 50-60 crores annually? Or we'll have some spillover of capex next year as well?
No, we'll have a bit of a spillover because we have also planned a couple of these projects in phases as well. So we have phased it out because of how the revenue builds up.
Okay. Thank you, sir. That's all from us.
Thank you.
Thank you. The next question is from the line of Bharat Kanani from Sharekhan. Please go ahead.
So thank you very much for the opportunity. Two questions I have. One is, again, coming back on the management fee. So can you provide that? You have raised it from 1.5 to 2%. So that is just for our understanding, it's as a percentage of top line or as a percentage of profit? How it is?
No, it's always been the same. The basis remains the same. It's the percentage of top line.
Okay.
We haven't changed the basis, yeah.
Achha. Okay, fair enough. And another question would be, in the presentation, you have highlighted that you will be also looking at inorganic growth opportunities going to boost your top line in the future. So, is there anything in the pipeline you are considering immediately? And another aspect I want to understand is what product areas you would be looking for inorganic growth. So, it's a different product altogether, or if you can just explain the nature of that. That would be really helpful. Thanks.
Yeah, thanks. So, we are definitely scanning for opportunities as far as inorganic growth is concerned. So we are right now, of course, focused on the suspension area itself. So it's only in the field of suspension. So we have had a look at a few cases as well. But it will take time because we need to do a much deeper study. Okay. But to answer your question, it will be. As of now, it is definitely in the field of suspension only.
Two-wheeler suspension?
No, it can be anything, but in the suspension industry. Yeah.
Oh, okay. Thanks, sir, and all the best.
Thank you.
Thank you. A reminder to our participants: anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks a lot for taking my question and congrats on good set of numbers. So first of all, I missed the numbers given to earlier participant, the market share for CVs and growth number for CV in this quarter.
Yeah,
Raj, you want to take that?
So the market share in CV segment is about 85%. I think that was confirmed. The growth in CV segment is in about 50%.
50% plus.
Right.
Right. And PV was marginal, right?
Yes, PV was marginal, yes.
Okay. So recently there has been a price war between two-wheeler majors, OEMs. Did we get any feelers from the our customers regarding price cuts or volume numbers in near future?
Well, Pankaj, yes, obviously we have got some feelers. As regards, we have had the yearly, as we call the yearly price down clause or yearly price reductions that we have a negotiation. But yeah, we have had some feelers on that as well, what you mentioned.
So does that mean, would that lead to correction in our prices per unit or pressure on our margins in future?
No, well, these are, as we say, these are business, normal business tactics. So I think we just need to keep working on how do you become efficient. So obviously any reductions that we pass do not come out of the margin. Otherwise, as I said, we do pass a reduction with many customers, but still you have seen, the EBITDA and PBT continuously increasing. So we obviously work on our efficiencies, our supply chain, and keep continuously reducing waste and thereby funding these reductions, if at all.
So should I take it positively? I mean to say that there would, since there would be rise in volume numbers, we would be benefiting.
Yes, we will be able to.
But whatever price pressure there would be, we are efficient enough to protect our margins.
Yes, generally speaking, yes.
Okay. And second question, sir, yesterday or day before yesterday, Ashok Leyland has come up with revised targets for FY2021 onwards, post to FY19. So, what would be your comment on the same? Do we also see that type of order book building up in CV segment in next 2 to 3 years?
Well, I mean, if you're referring to, I think Mr. Vinod Dasri's interview, right?
Yeah.
So yeah, I think fairly we all believe the same as an industry. I think it's going to be strong right up to April 20. There'll be a lot of pre-buy. I think he's also mentioned very clearly that even globally, India is far more price sensitive when we speak about that. But even globally, whenever there's been a emission regulation change which impacts the price significantly, let's say in Euro 4, Euro 6, there has been a pre-buy. So we'll definitely see much higher volumes. That's what we are seeing currently in CV, because people will start the pre-buy, in fact, from, it'll mainly happen in the coming fiscal.
Right. So next 2 to 3 years would be quite busy for us. And, I mean, are we well equipped enough to cater to that demand? Both now since due to this price war, there would be rise in volume on two-wheeler side. PVs and PVs are really doing well, and now CVs also will join. So are we equipped enough on all fronts to handle the pressure on us?
Well, CV, we definitely are putting in a plan to meet additional capacity. So, part of the capex this year, while we, of course, did mention that it's on the two-wheeler side, and there has been some small debottlenecking that we are planning in the commercial vehicle segment as well. So we'll definitely be, well prepared to handle this upsurge that will happen in the commercial vehicle side. And two-wheelers, we have already done the investment, both in Nashik as well as Hosur. Plus, I just did mention that, we are already investing for almost a completely new plant, while it is a brownfield, but in Sanand.
Okay, sir. Thank you. Thanks a lot.
Yeah, thank you.
Thank you. Any participants who would like to ask a question at this time, they may please press star and 1. We have the next question from the line of Dhiral Shah from Asit C. Mehta. Please go ahead.
Yeah, good afternoon, sir, and thank you for giving the opportunity. Sir, my first question is regarding, in your annual report, you have mentioned that you want to grow your aftermarket business turnaround up to 500 crore by 2021. So how confident you are and what makes you to give, this kind of a guidance?
Well, one thing is we've been growing well every year aftermarket. Of course, we've had a little bit of while we are still grown, we have grown more than double digits. Even in the last year when the year was bad, in terms of demon and then GST happened. So obviously, there has been a little bit of, otherwise we were growing a little bit of slowdown compared to what we were doing in the previous years. So otherwise we were doing, in excess of almost 20%. So some confidence comes from that aspect. Then of course, vehicle owners are becoming more conscious about, replacing shock absorbers, having a car in good condition, because that's the normal buyer or user maturity that happens in every market. So we feel that there'll be a good growth in this segment, and we have taken some focused efforts in particularly, in the two-wheeler segment as well, which has helped us, in fact, grow our sales further in aftermarket. In addition, we will launch new products, as you know, tires, wheel rims, and we have also recently launched another new product for tie rod, ball joints, and steering cone. So we'll be even adding a few more to this. So all this put together, that's how we have drawn this plan. Well, 500 crore is an aspiration, like you rightly mentioned. It's an aspirational target, but that is what we are committed to and building towards meeting that.
Okay, because this implies a CAGR growth of 30%, every year.
Yeah, so it will obviously have to come beyond shock absorbers. So that's why I mentioned that the products that we are adding by leveraging the Gabriel brand name. Just to mention that while we are not adding too many, we add them very carefully, because we are of course always extremely cautious about our keeping our brand name, which is basically means good quality. So we have a very careful selection process and a continuous monitoring of the new products that we launch. So that's why you may not see many products of proliferation, but it will be carefully chosen, but we will back it completely.
So by FY21, let's say, if your aftermarket is contributing 11%, so do you feel it can go up to, let's say, 15-20%?
Well, we are, that's the plan. We want to definitely grow the aftermarket and exports. Both of these, are higher realization. So one reason why we have not, the EBITDA has not been as good as we would wanted to have it, is because, the exports and aftermarket has been a little low, but now it's definitely catching up the aftermarket part. Aftermarket exports, while we are talking about that, is really growing extremely well. It's growing in well over 30%.
Oh, that's good to hear that. And so second, this management fee hike of 2%. So this is for how many years? Means this is for only this year, or maybe?
No, it is. That will continue. It was. It used to be 1, and then it became 1.5 and 2. So let's say it's.
How frequently?
There's no frequency to this. It's only based on what additional support that we would seek from the group resources, because when you're, as I mentioned, growing company, and now we are doing 500 crores a quarter. We have multiple locations, so obviously we need a lot of support from we need to tap into the group resource continuously.
So earlier when it changed from 1 to 1.5, it takes how many years? Because
the last happened about 5 years back.
Okay, so we can assume at least this 2% would be there.
There's no guidance to that actually, but yeah,
Okay. And sir, regarding your effective tax rate for next 2 years would be around? Because last year, the tax was higher, right?
Yeah, so I think now we are at a level where this would be the effective tax rate, because there are no further tax stops. Even the R&D benefit has come down to 150%. So Raj, you want to clarify on that?
Sure. So the R&D benefit, tax benefit under 35(2)(ab) for the R&D expenditure at 150% will continue till 2020, and so that's the only tax benefit which we are enjoying at this point of time. So beyond that, I think.
So to answer this question, basically we would be in the same tax range right now. That will continue, right?
That's right.
Of 33%, right?
Yeah, so the current effective tax rate is where we are, with enjoying only one single tax benefit, as I mentioned, and that will be till 2020. Beyond that, it could be the marginal rate unless there is any change in the government tax rate.
Okay. And sir, third thing is, sir, your other expenses up 26% on a YY basis. So is there any one-off in it? Because your sales is up 23%, but your other expenses up 26%. It's more than the sales.
Yeah, so that carries this management fee increase.
Acha, okay. And sir, how confident you are to maintain, or to improve, this kind of a margins? So let's say, if you are of the optimistic regarding aftermarket and export business, so do you feel, we can see, double-digit kind of a margins going ahead?
Yeah, certainly. I mean, that's, I've shared that's the plan. I mean, we definitely want to be at 10%. We've had, this year we've had a little bit of setback, which is, mainly the custom duty impact, which I already mentioned, which is, almost the effect impact of that would be close to 0.5%. So we have had to absorb that and still, continue this higher. So we have changed our plans slightly. I mean, we are working towards localization, but obviously it doesn't happen overnight. There's a plan which will go on for a year or so. So that our target remains clearly double digit. Yes.
Oh, and sir, just last one question, sir. Sir, in your automotive segment, which segment can give you higher margin? Let's say in two-wheeler or passenger car or commercial vehicle, sir? Which segment?
Like mentioned, of course, aftermarket is right up there, and then commercial vehicle. I mean, they're all good. Passenger car is the most competitive.
Okay, passenger car.
Yeah.
Okay. Thank you, sir. That's it from my side.
Thank you.
Thank you. We have the next question from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Yes, sir. Thanks again for the opportunity. So this management fee appears in the legal and professional line item, is it?
You're right.
Okay. And so on this margin front again, now for the past 10 quarters, we have been, sort of hovering between 9 to say 9.7, 9.8%. So now this quarter, if you look at, we already had this 50 bips impact of this management fee already there in the quarter. Then we also had this impact of higher, percentage share of the OE business, where the OE business actually grew stronger than the replacement. And then we are also in a scenario where your raw material prices also were increasing until last quarter. So, I mean, any other, one-off or something, which could have been there, or, maybe certain, expenses which could get, booked, and, or there would have been some deferment of those, booking of those expenses in this quarter, which would have kept our margins at 9.5, which is still slightly higher Q1Q and year-on-year.
Yeah, so Arun, I think you covered most of them. The only thing could be that custom duty impact on our imports, which is increased by 5%. I think that's an impact which you also faced during this quarter. As well, also to highlight to you the commodity price increases which we experience. While on the OEM front, we do have a back-to-back which is settled on a cycle basis. On the other segments and channel, we may not have a back-to-back arrangement, and the price corrections have to be completed by us.
Okay. So, sir, I mean, taking this query a bit further, going forward, it means that maybe if you're able to improve your replacement market share or the share in the revenues, and also, some pass-through that could, we do it with the OEMs, we should see this 10% sort of margins coming in the coming quarters this year itself, or it'll take some more time there?
Well, Arun, we do not, as I said, we do not give a guidance, but yes, if the commodity prices stabilize, certainly we see some positive impact. But again, like we never can predict the commodity cycle. Today we are on the receiving end. Tomorrow you'll be gaining, so it always keeps fluctuating to that extent. So while we can tell that yes, we may hit a double digit in this year, but if the price escalation happens in commodity, again we are back to going down. So I would say the target is double digit, and I think we should hit that.
Okay. Okay, that's it from my side. Thank you so much.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Sumit Hisli from Sahara Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. So you said that you have got an impact of custom duty increase on your imports. So just wanted to know what is your total import content on the raw material expenses?
So our raw material imports is in the region of about 250 crores per annum. And whereas the imports which have got affected is not all. A certain portion of them have got affected due to this custom duty increase.
Okay, sir. Thank you so much.
Thank you. We have the next question from the line of Vijay Sarthi from Anand Rathi. Please go ahead.
Good evening, sir. So I just want to understand about your aftermarket prospects. So given that you have a very ambitious plan to move to 500 crores, could you tell me what are the new products that you plan to have in your aftermarket business in the next 1 year, 2 years for you to achieve that, notwithstanding the growth that you will have on tires and other products?
Yeah, so what we have planned is, because we are known in the suspension domain, so we would want to remain around that area. So we've explored tires, wheel rims, we have already done. We have added spokes. Yeah. We have also added the steering cone set. We are going to add possibly even the tie rod ball joints.
Sorry, sir.
The tie rod ends.
Okay. Yeah.
So that is going to be added. Plus, right now I'm not in a position to disclose, but we have already lined up a few more products as well.
Okay. And what proportion of your passenger vehicle business would be utility vehicles? I mean, sequentially, if you see, the passenger vehicle business has actually dropped while the segment has grown a bit. So I just want to check what proportion would be for UV so that I can understand why your business has not gone up.
Okay. So maybe Vijay, we'll have to get back to you on this. But yes, on the UV part, as far as market share is concerned, we are quite strong. We have over a 40% market share in the UV segment actually. Okay. So that's why, while we, like I mentioned earlier, while we have lost on the passenger car front, on the UV front, it's been a very good growth.
Okay. Finally, on the capex, on 156 crore capex, you said 40 crores in Sanand. How much would be for debottlenecking towards commercial vehicle products?
That would be in the range of, I would say, 7 to 8 crores.
Okay. And so, where does a substantial part of the capex come?
That's for commercial vehicles.
Okay.
So mainly three broad areas, which is one is the Sanand, plus the casting to feed that, which is another almost about 10 crores, and then we also have the R&D tech center that we are building for passenger car, and so that's also planned as of now. Yes.
Okay. Fair enough. Thanks.
Yeah.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Manoj Kolhatkar for closing comments. Thank you, and over to you, sir.
Thank you. Thank you, everybody, for your questions. I do understand some of you must be in the same position that we are in terms of the Maharashtra Bandh, and possibly you're taking calls from wherever. So thanks. Really appreciate all of you joining. So I hope we have answered most of your questions. There are a couple that we could not answer. Please feel free to get back to us so that we are able to clarify those questions separately to you. And in terms of the next quarter, of course, we all, as Indians, do look forward to this quarter. This is the bumper quarter, as we call the festive season of July, August, September, and in fact it goes up to October as well. So naturally, yes, we have our hands more than full, and we Gabriel team would put all efforts to maximize our part to be our part for the overall story of the Indian automotive industry. And look forward to the next call. And while we will definitely meet before Diwali, because our next board meeting is before Diwali, however, I would wish all of you a very happy start of festive season. And thank you, and that's all from my side. Thank you. Bye-bye.
Thank you very much.